Hey guys, hopefully everyone is doing well. Today's target is to solve question number 10. The chapter which we are related with is company financial statements, and here we are going to make two different statements. On left side we will be making profit and loss statement, on right side we will be making balance sheet statement. So as usual we will review our question before starting and recording these transactions. Here you can see there are two sides, one on your one left side and one at your right side, but please note it down, totals are not available over here, so we can't see total of both sides, which is very important to be noted down. Since it's not a total, means it's not a trial balance. When it's not a trial balance, all assets, liabilities, expenses, and incomes, all these four factors are mixed. It may be present, it may be possible assets are present over here, or possibly asset can be present on this side as well. So there is no permanent segregation. If it was a trial balance, assets and expenses were supposed to be over here. Liabilities and incomes were supposed to be over here. So it was a quite comfortable situation when you get your trial balance, but here it's not a trial balance. It means all factors are mixed over here. So this was your upper part. If you are unable to read the words, that's not the problem, just view the shape of this question. Now on lower part, few adjustments are present, means amounts which were supposed to be present in upper part of question were not adjusted in due time, so they are still to be adjusted. These are adjustments, and when we are making their effect, there will be a dual effect. A good thing is we have answers of all parts of our question. You can see we have gross profit answer, net profit answer, appropriation balance answer, and balance sheet answer is also available. This is our performer. On left side, this side, left side, there will be three parts. Direct side would be used to calculate gross profit, indirect side would be used to calculate net profit over here, and third part here we will be using to calculate appropriation balance. On right side there are two main factors. First we will see asset side, including fixed current assets and investments. Sum of these three would be equal to total of asset side and total of balance sheet. Lower is for liabilities, where you will be recording all fixed liabilities, current liabilities, and reserves. Sum of these three would be equal to total of liabilities and total of balance sheet as well. So here we have the pro forma and a brief overview with which now you can understand that what is our target, what we are going to do today, and what is our goal. As it was earlier informed that if adjustments are present in your question, it is suggested to solve these adjustments as your first step. Otherwise, possibly whole question could be mixed. So it's better to start question from adjustments. We are ready to start. Let's begin. Stock on 31st March. It means its last date. Look at here, on 31st March 93. This was your last date, and stock is also given at last date. So it's a closing stock. We'll go to cost of goods sold statement, and here we will start with opening stock, then we will add purchases, we will subtract returns, and we will subtract closing stock, and we are talking about this closing stock. amount of which is given as 252,000. Just put 252,000. So first effect is completed, and we are now going to record closing stock in asset side as well to complete its dual effect. So 252,000 recorded in current asset side as well. Dual effect of first adjustment is completed. Now let's see what second adjustment is saying. Depreciation on plant and machinery. So here on fixed asset side, first we will be recording plant and machine value. Let's search out. Now please note it down, plant can be over here and plant can also be possibly present over here. So you will have to be focused for everything. Luckily plant is present upper side, 9 lakh is the value. Just write down 9 lakh over here. And now we will see if rate of depreciation is 10% and there is no other depreciation present over here. You can see that depreciation is not present. So previously we were bothering about method of depreciation like fixed base method or diminishing rate or diminishing balance method. Here nothing is mentioned, so directly this depreciation can be calculated, and it is said to calculate 10%. So what we will do, 9 lakh, and then we will calculate its 10%. What is 9 lakh? I'm sure you people know its value of your asset, and then 10% rate was asked in adjustment. Depreciation is calculated. Now you will go to operating expense side, and here depreciation of plant and machine would be recorded, and I think that is 9,000. So depreciation of plant and machinery 90,000. Let's check it out. What is, yes, it is 90,000, and we will be recording over here. So let's write 90,000 in operating expenses as well. So dual effect of first depreciation completed. Now second depreciation is upon fixtures. Here we will come to fixed asset side, and we will note down value of fixtures, and this value is present over here. Amount of fixture is 18,000. Noted down. And now we will see rate of depreciation upon fixture 5%. So let's calculate. Fixtures amount is 18,000 and we will be taking 5%. So what is 18,000? This is value of your asset, and 5% was asked in your questions. Depreciation on fixture is calculated. Similarly, you will come over here, fixtures, and we have calculated 900 as depreciation. Is it? Yes. So amount of fixture 18,000 and 5% was required to be calculated. So second adjustment is completed. You have seen that two depreciations present in fixed asset side which would be subtracted, and two depreciations are present in operating expenses. Beside this, our second adjustment is completed. Now third adjustment is saying preliminary expenses to be written off by 20%. So it means 20% of preliminary expenses are written off. We will go to indirect side. We'll note preliminary expense. Let's see how much amount of preliminary expenses are, there we have got 12,500, and we are going to take 20%. Now, why we are doing this? Preliminary expenses are basically assets. You will be surprised that even the heading or title is expense, but preliminary expenses are paid even before the start of the business. That is why it is called preliminary expenses. And since they have been paid in advance, so they will be considered as asset. But now it has been said to write off. So these preliminary expenses 20% are written off. This was said in our adjustment. You can see written off as 20%. Now what will happen for its second effect? You will go to current asset side, and here preliminary expenses would be noted down. Total of preliminary expenses were, look at here, 12,500, and out of this 12,500 you can see that 2,500 is written off. So remaining amount would still be considered as an asset. What we have done, 12,500 was total amount of preliminary expenses, but 20% were asked to be written off. Remaining 10,000 would still be considered as an asset because they have been paid even before the due date. Guys, you have seen that third adjustment is completed, dual effect is completed. Now number 4, 25,000 were to be transferred to general reserve. So it's not an operating expense. We'll go to appropriation side, and here transfer to general reserve, and amount of which is said to be made 25,000. So first we will write 20,000, 20, oh God, let's see again, 25,000. Yes, it is 25,000. Put it over here. And now for second effect, we'll go to current liability, and here transfer to general reserve. 25,000 would be recorded in current liability side. So dual effect completed, one in appropriation side and second in current liability side. So let's see what next. Number 5, provision for income tax. This is also a non-operating expense. Just like transfer in general reserve, in the same manner it is for income tax. Provision for income tax, that is I think 62500. Alright guys, so first effect is completed for provision for income tax, and this amount was mentioned as 62500. Similarly, we will go to current liability side, and provision for income tax 62500 would also be mentioned in current liability side. Dual effect is completed, one in appropriation debit, secondly in current liability side, which means our double effect of fifth adjustment is completed. Now number 6 adjustment, provision for bad debts, 5% on sundry debtors. So you will go to current asset side, and here sundry debtors, and then you will subtract additional bad debts. You will also subtract new provision for bad debts, In adjustment, this provision is actually the new provision 5% on debtors. Now for that we need amount of debtors. So sundry debtors, here it is mentioned 2,17,500. Sundry debtors 2,17,500 amount of debtors. Additional bad debts were supposed to be present in adjustment. But as you know, there is only one provision, so additional bad debts are not present, so you may mention 0. And now, just for calculation, we can raise to create a space. Okay, listen, 217,500 amount of debtors, and then it is said to calculate 5%. This would be considered as new provision. How did we calculate? 217,500 was amount of debtors, and in adjustment it was said to take 5%, so we have got new provision. Now we will go to operating expense side, and here we will record bad debt adjustments. So let's see if other elements are also available. Yes, we have reserve as well, and perhaps bad debts would also be. Yes, bad debts are also present. So all four elements of bad debt adjustment would be noted down. First bad debts, and then we will add additional bad debts, then we will add new provision for bad debts. After that we will subtract old provision for bad debts. Please note, we have just calculated these amounts over here as well. Additional bad debts were 0, put it. New provision 10,875. Okay, so all elements related to adjustments, provision for bad debt, additional bad debt, they are now noted down in both sides. One you can see in current asset side, and second in operating expense side. So 6 adjustments were present, and we have double effect of all adjustments completed. We can now focus upon elements present in upper part. First is equity share capital, 11,50,000. So here 11,50,000 of capital we have noted down, and we may call it issued, paid up, or subscribed capital. 11,50,000, this was provided in the question, and nominal or authorized capital is also available, 15 lakh. So you may record 15 lakh in liability side as well. But you will note down this authorized capital is basically nominal capital. It's not real capital. We have underlined it. This amount would not be included actually in fixed liability side. This is just to show out that we have authorized capital, nominal capital. After authorized capital, next is plant, 9 lakh rupees, and I think we have noted it down. 9 lakh is written over here. Then we have stock. Stock date is mentioned as 1st April. It means it's a opening stock, so we will go to cost of goods sold statement. and here we will be writing amount of opening stock 187. It's 6 or 5. 187 and it's 500. So write down 500 as opening stock. So then we have fixtures. Fixtures 18,000 already written. And now let's see what next is. We were having fixtures. Then we have sundry debtors 217,500. I think it is also look recorded as well 217,500. Next buildings 750,000. Building is not recorded. So here building amount of which is 750,000. Today alignment of question is still not at ideal position. Look, building is going down, amount is going up, so it's little difficult. Then we have purchases. Already its seat is reserved. Amount of purchase is 462,500. So just note in direct side or cost of goods sold side, purchase is noted down. Interim dividend. It was earlier described no matter what kind of dividend, whether it is interim or final dividend, adjustment or trial balance. All types of dividend would be recorded in appropriation side. 18,750. So only single effect in appropriation debit side we have recorded. Next is rent. Rent is part of operating expenses. So here we will be recording rent, amount of which is 12,000. So 12,000 would be recorded in operating expense side. I was telling you due to misalignment, it is little difficult to judge. After rent, general expenses. This is also part of operating expenses. Just write down amount of general expenses 12 to 50 in operating expenses 12 to 50. All right. So guys, you have seen that 12 to 50 is recorded, after which we have debenture, where we were no, general expenses 12 to 50. Next is debenture interest, but you can see here debenture 6% is also available. We should be very careful. Debenture interest operating expenses we will go, and first you will be noted down debenture interest, and then we will see if there is any outstanding interest. Right now we are related with the amount present in trial balance directly, and that is again 12,500. Okay, noted down 12,500, and after that when we will reach on right side, look at here debenture and percentage is also mentioned over here, so we'll have to adjust something more. After debenture interest we have bill payable. We'll go to current liability side, and here bills payable would be recorded. Amount of bill payable 95,000. In current liabilities, we have recorded bill payable. Then we have general reserve. This is also part of liability. Reserve section is fixed, and here general reserve would be recorded. Amount of general reserve is 62500. 62500. Alright guys, so general reserve is recorded. Then we have profit loss account, that is part of appropriation account. So we'll come over here, profit and loss account of previous year. Amount of this profit and loss account is 36,250, and this would be recorded in appropriation side. You have seen that left side, all elements present over here in left side, they have been recorded. Now come over here, preliminary expenses, they have been recorded over here. So no need to do anything more. Freight and duty, this is part of direct expense side. Come over here, freight and duty. Amount of freight is 32,750. So note over here, in direct side, freight and duty has been recorded. After freight, we have goodwill. It's part of fixed asset. So just record it. Amount of goodwill is 52500, I think. Amount of goodwill. No, it's 62500. It's misleading, little blurry over here. So it is 62500. Amount of goodwill. I think we'll have to recheck it again because of this image. Wages present over here to 12,000. So let's go to direct side and we are going to record over here wages. Amount of wages to 12,000. So we are going to record it to 12,000 over here. After wages, next cash in hand is mentioned over here. Current asset. Here you will be recording cash in hand. Amount of cash in hand is 24,525. Let's see it again. This is 24,625. Let's write down 24,625. I am right now requesting you, you may have seen that it takes time. Look at here, if only one single digit of any amount, if you have put wrongly in any part of financial statement, so believe it up, your whole question can be rude and time would be wasted. That is why it is better to see again and again, not to do any mistake. Cash at bank now. I am not solving it as a teacher. I am letting you know how you will record these transactions when you will be solving such questions in your exam. So cash at bank again, there we'll have to see it again, 95750, 95750 amount of cash at bank, it has been recorded. After that, cash in hand, we have director fee. So it's part of indirect side. We'll come over here and we'll mention director fee. Amount of director fee is 14350. All right. So put this amount 14350. So its amount of director fee recorded. Now after director fee, we have bad debts 5275. Bad debts are recorded over here. So amount of bad debts 5275. 5275 amount of bad debts recorded in operating expenses. Then we have commission paid. So we will go to other expense side and here commission paid. You may write in operating expenses as well. Amount of commission paid is 18,000. So here in other expenses, commission paid is recorded. Then we have salaries. Come to operating expense side and here salaries would be recorded. Amount of salaries 3250. No, it's 36250. So here in 36250 in operating expenses. So amount of salaries 36250 is recorded. After which we have debentures. So this was previously discussed. It has a percentage. Beside debentures, we have a percentage. So let's go to indirect side first. And we have already recorded debentures and its interest. Come over here. And here we will be calculating percentage on debentures. Now you have noted it down. Amount of debentures were written 750,000. Just put it over here. And percentage which was given beside it was 6%. And you will calculate this percentage over here. Once again, I am letting you know. Please note it down. 750,000 was the amount and 6% was mentioned over here. And what we have done in debenture interest, note over here 750,000 multiplied by 6%. So percentage would be calculated outside. Interest which is provided in trial balance would be written over here, and for outstanding what you will do, difference of these two amounts, that means 45,000, and you will subtract 12,500. This way you will be able to calculate amount of outstanding interest. 45,000 is percentage and 12,500 was the amount different which is present in trial balance. So it would be considered as outstanding 32,500. Now you will come over here. Debentures are long-term liability. Amount of debenture was actually 750,000. And please note it down. We have three amounts: 12,500, 32,500, and 45,000. The only one amount which you will note down is basically this outstanding. So 32,500 would be considered as outstanding interest. if you want to have it more clearful, so what you will do, there is a little trouble over here. Okay, so what we have done, note it down. Debenture interest which is present in trial balance, you will note over here, and percentage on debentures will be calculated outside. Difference of these two amounts would be written inner column. This is outstanding, and this outstanding would be written in liability side as well. So guys, in this way our debentures completed. Amount of sale, this would be recorded in direct income side. Alright guys, we are now reconnected. We were talking about this amount of sales. Let's go to direct income side. There you will mention sales. Amount of sale is 1037,500. In direct side, we are recording 1037,500. All right. So we have now government securities. Here you will have to stop and understand 4% is mentioned over here, but date is not mentioned. So we may be calculating or we may not be calculating depending upon your own decision in paper. As you can see that date is not mentioned. So if date is not over here, year is not over here, you are not needed to calculate it. But secondly, interest was not present anywhere else. So we are opting an option to calculate it. And let's say if it is not matching with the answer, we may delete it. So government securities, first you will go to fixed asset side, and here government securities you will note down, amount of which is 150,000, but beside it interest of 4% is written. So 150,000 multiplied by 4 divided by 100 to calculate your amount of interest. Now please note it down what we are going to do. What was this 150,000? Government securities amount, and 4% was interest to be calculated. 6,000. Now let's go to other income side, and here we will mention interest on government securities, where we will write 6,000 of interest we have just calculated. Alright guys, next is reserve for doubtful debts. This is old reserve. We have already a place. Here we will record it. Amount of this provision is 8750. Write down 8750 over here. Then we have sundry creditors. It's your current liability. Sundry creditors. Amount of sundry creditors 125,000. Mention in current liability side. After which we have office equipment. This is part of fixed asset. Office equipment, amount of which is 10,000, and in fixed asset you have noted it down. So guys, you have seen that each and every element step by step we have recorded in our financial statement. Office equipment was the last. It means we are now ready to calculate our profits or maybe losses. For that we will go to direct side. No returns are present. It means amount of sale would be considered as final sale. Now we will see first part of cost of goods sold statement, where we have opening stock, add purchases, and subtract closing stock. We have got cost of goods sold statement. Now there are two elements of cost of goods sold, first part, and then we have direct expenses. Let's calculate total amount of cost of goods sold statement, where we do have first part of cost of goods sold, that is 39800. Please excuse for this distraction. And then you will add direct expenses. Here there are two direct expenses. So total amount of cost of goods sold statement arrived. We have cost of goods sold plus direct expenses. Final amount is 642750. Now let's calculate amount of gross profit or loss. So we have got total sale 1037,500, and you will subtract cost of goods sold statement. So what we have got is 394,750. This is your gross profit. Let's check answer from the book, and where there we have 394,750. Our answer is also 394,750. It means first out of 5 parts sold. We'll now focus upon our indirect side, where we will see bad debt adjustment, bad debts plus additional bad debts plus new provision, subtract old provision, and we have got the final amount of bad debts. Debenture interest is okay. Director fee, why we have not written director fee? Let's see where director fee is, and it is not present over here. Yes, this is director fee 14,350. Let's mention 14,350 is your director fee. Let's confirm the amount of director fee 14,350. Is, and we can take their sum of all operating expenses from 36250 to 90,000. We have got our operating expenses. Operating income is not present, put 0. We have other expense total already available, and this 6,000, as we were saying, we have two options. Now let's calculate our net profit. For this, first we will take gross profit, and then we will subtract operating expenses, then we will add operating income, subtract other expenses, and add other income. So what we have got is our net profit. This is 162,100. Let's check it out from our answer, and we have got 162,100, 162,100 present over here, 00 or 100. So it means 2 out of 5 parts we have solved, and net profit is exactly matched to our book, with which now we can focus upon appropriation side. These are 3 expenses and only one amount as our income. To calculate our appropriation balance, what we will do, first you will take net profit, then you will add your profit loss account, and then you will subtract all expenses. Means income less all expenses. So we have got an amount present over here. We'll have to check it out. The amount of profit and loss account given in your question was 36250. This is okay. And interim dividend was 18750. That is also okay. After which we were having adjustment 5% on dividend. Final dividend 5%, and dividend is not recorded over here. So let's record final dividend. And why we have not recorded, that's so strange. So to record dividend, we will see amount of capital. This is 1150,000. Write down. First we will record over here so that you can understand what we are doing. 1150,000 amount of capital, and final dividend is 5%. I will let you know what we are going to do. Look at here, this was first adjustment, final dividend, and perhaps due to closing stock we skipped it and directly gone to second adjustment. So 5% we will take as final dividend. Here 11,50,000 was capital. Whenever you need to calculate dividend, you will always be taking capital, and here it's 5% of final dividend is calculated. Here we will take sum of all expenses, and now we will calculate our appropriation balance for this: net profit current year, profit of previous year, less all expenses. So what we have got is 34600. Let's check it out. Answer given in the book. So surplus is 34600. So that's a good thing, we have completed three sides. Double effect of this final dividend is also needed, will come in current liability. Final dividend would be written over here, amount of which we have calculated 57500. Alright guys, and next step, this appropriation surplus would be recorded in fixed liability side. Over here, add appropriation balance, amount of which we have calculated 34600. In this way, we are ready to take sum of all fixed liability. Look at here. We have two separate fixed liabilities. So let's take sum of, this is your total capital, and now for debentures, add outstanding. It means there are two fixed liabilities, debentures and net capital. Finally, total of fixed liabilities arrived. Let's calculate sum of current liabilities. This is also ready. After which we have a general reserve. This is also calculated. It means now we will see the other elements which are present in our liability side. This was present over here, your capital, surplus, Debentures. Let's see, amount of debenture is 750,000, and here you will record 750,000. So what we have got is 2394,600 as our liability side. Let's check out the answer given in the book. So here we have 2394,600 and we have got 2394,600. It means our liability side is also completed. 4 out of 5 parts are completed. We will now focus upon asset side. Here you can see 9 lakh of plant, subtract 90,000 depreciation. Then we have fixtures, subtract its depreciation. Goodwill is okay, but here government securities, right? Total government securities add its interest. It means fixed assets are completed. We can now take some of these fixed assets completed. Let's come to current asset side. Here we have got debtors. We will subtract additional bad debts and we will subtract new provision. Debtors are completed. So it's time to take sum of all current assets taken. No investment was present. So what we will do, sum of fixed asset, current asset and investment. We have taken and got 2394600, and here liability side 2394600. So you have seen that all answers are perfectly matched. Gross profit 394750. It's okay. Then we have net profit 162100. Here we have got the answer, and appropriation balance 34600. That is also matched. And we have asset side 2394600. Here you can see 2394600, and our liability side is also showing 2394600. In this way, what we have done is in front of you, where all 5 parts are completed, answers are matched. One, this was your first part, second part, third part, fourth and fifth part. So here you can see that everything has been completed, and look at here how many dozens of amounts are entered over here, and same you will be doing in your exams as well. So you will have to be very perfect, but how you will do it? Viewing this lecture is not enough. What you will do, you will start practicing this question by yourself, and after practicing, I think at least 2-3 times you will solve this question. Then it can be said that you will be able to solve such questions in your paper as well. After practicing, if you still feel anything difficult, you are very open to share your problems through messages, text or comments. I will humbly be trying my best to answer your question quickly. So thank you very much for your time. It's time to end our lecture and it's time to say goodbye. Allah Hafiz.